Tobias, let's start with you. Just quick introduction of yourself and the company.
Hello. Yeah, good evening. Tobias Schultheis. I'm founder and owner of Blackbird Real Estate, which is a transaction advisory boutique headquartered in Königstein, small city near Frankfurt. We have offices in Munich and Cologne as well. Our focus is sell-side advice for commercial real estate. And the second business line is joint ventures and then developments, which we do from our Munich office. Thank you.
Great. Thanks very much. Christian.
Hi, my name is Christian Zilli. I'm founder of Waterway Investments, an advisory company based in Frankfurt, and we advise clients on non-core investments, brokerage with regards to BCD locations in Germany. We do debt brokerage, capital solutions, fundraising, and project development advisory.
Great. Thanks very much. Leonard.
Cool. Hi, my name is Leonard Sachsenhauser. I'm a founding partner of Coros. Coros is a private equity company based in Munich, Berlin, and London now. We started a couple of years ago. I joined in 2015, and we then raised AUM up to 1.5 billion now. So we invest in commercial space, and we do care a lot about workplace of the future and how to create ESG compliant product out of existing building stock and not just by redeveloping.
Great. Super. Thanks very much. And Christian number 2.
Yes, correct. Hello, everyone. My name is Christian Lütke-Uhlenbrock, and I'm an audit partner at RSM. RSM is an audit, tax, and consulting company, and in Germany we have 17 offices, approximately 700 people working for us, and we are also part of the international RSM network. So the RSM network is the 6th largest audit tax consulting network worldwide, and our focus is on the middle market. And we serve all the requested services for our clients. We offer a lot of tax services, VAT services, audit services, but also compliance services like bookkeeping and so on, especially for the real estate sector. And that's at this point.
Great. Thanks, Christian. We don't have time to introduce everybody else, otherwise that would be the time gone. But we will accept that we know you and you know us, which is great. Tobias, maybe just starting with you. Obviously, Germany viewed very much as kind of safe haven, those kinds of things. Do you think that's changed at all? Do you think that's more the case now than it was pre-pandemic? What's your sense of how people perceive the German market?
I strongly believe that Germany still is a safe haven, not only for local domestic investors, but also for international investors who were allowed to travel in the last 1.5 years. But the answer is also depending on the different sectors. For example, office buildings definitely are still a very safe investment. But then you also have to differentiate between what kind of office buildings. For example, earlier this year we sold a roughly 80 million office building, 20-year lease contract with the government, and we had more than 2 handful of buyers who wanted to buy the building because that's like it's a bond-like investment. These are still heavily sought after by investors, but as soon as you have some question marks regarding the building, say some vacancy, not the best inner city location, but secondary location, the more question marks you have, the less interest is from the investor side. But as a general answer, we are still considered a safe haven, and that's good. I hope this remains for many years.
Okay, good. And has anything changed post-election in terms of the investors' views, or do you think it's not really going to make a big difference, Christian, in terms of the investor views on Germany?
Well, I think right now it's a bit unclear where we're going. It all looks like we're having the coalition with the Social Democrats. But I think the Jamaica coalition is not yet ruled out, which would be, I would say, a bit better for business. But the big danger of having a red-green coalition was avoided, and I think this is a good signal, also a good signal towards non-Germans and international investors that German voters are not totally crazy. We believe in the rule of law in our country, and people made the ticks where, yeah, I mean, it was in direction stability and certainty. And whether it's going to be Olaf Scholz, a chancellor, or a CDU candidate, I think in the end it doesn't matter too much.
Okay, good. And from, I suppose, from your point of view, Leonard, are you seeing, similar amounts of investment interest in Germany, or are you seeing that growing? I mean, interesting as well that obviously as travel comes back, as we can see from here, that international travel is coming back. Do you see the market being a bit more competitive as well, because more international investors will be coming back into the German market?
Yeah, I think, Chorus is investing in Germany mainly. Now we're internationalizing to London and Paris. But yeah, we do see for quite a while, and since we started, a high interest in the German real estate market. Always a big competition. It never felt like there's no competition, even in the heydays of COVID when it all started, beginning of 2020. I think, also talking to international investors and colleagues of mine, Germany is still regarded as a quite a safe market, and obviously everyone was interested in the elections. I do believe that now, we will get a coalition that, will not deteriorate like investment activity. I think it's gonna be a good change for all of us in terms of innovation and green policies that might come to the market. And I think Germany offers good fundamentals, and continuing to be very happy in the German market as investors and delivering products there.
Okay, good. And Christian, from an RSM perspective, I suppose you're also seeing there, as part of the international network, you're seeing international companies, international investment looking at Germany. What have you seen from that? Are you seeing more people looking for partnerships, more people coming in? What's your sense of the sort of international side of it?
Well, I think in the last 12 months it was not so easy because due to the travel restrictions. I mean, I'm here with my colleagues from RSM, from our European real estate group. So we have a sector group with several countries, and we work together on this focus. And we were not able to meet in person in the last months. So we changed to online meetings, Zoom meetings. And but what we see is that the network is still increasing, and that the interest of investors is still increasing. And now the travel restrictions are getting lower, so people are coming back to Germany. Yeah. Okay, good.
I wanted to pick up a little bit in terms of some of the sectors. You mentioned office already there, Tobias. I mean, are you seeing that as the big key cities, or are you seeing opportunities, across some of the smaller B and C cities? Has there been any change in terms of people's desire to be, in a big city office versus, maybe more opportunities in smaller cities? What's your sense of that?
Well, when you look at the last 10 years, you have seen a lot of institutional buyers or investors buying in the top 7 cities in Germany, and these locations are, on the one side, there's not that much of properties for sale right now, and those who are on the market, they are extremely expensive. We talk about gross initial yields way below 3%. So that's the reason why not only opportunistic value-add investors, also the typical German investors representing boring money, they also go to B cities, C cities, and then buy offices there. And that's, I would say that's your business model. As you say, you cover B and C and D cities. So this is definitely cities where you can go and buy properties. For example, the office building I mentioned was sold in a city called Bergheim, which is some 35-40 kilometers west of Cologne. International investors may say, okay, this is the greater Cologne region, but it's not. It's a single city with I don't know, 50, 60,000 inhabitants. But in that case, we had this long-term lease contract, so it was sold to a German institutional investor who just wanted to get rid of his money.
Okay, interesting. So that should be It should be boom time for you, Christian, by the sounds of it, if there's institutional investment looking at this type of capital.
Yeah, Tobias is right. Obviously, there's a crowding out effect going on. If you were a core investor like 7 years ago and you made your 4 or 5% with core investments, that's no longer possible. The core investors, they were crowded out by super core investors who are happy, not to lose money versus bonds. And the core investors went to the core plus areas. The core plus investors went to the value add areas, and the value add investors don't have a business model anymore. And that's what happened. And obviously, capital values increased across the whole spectrum. And you asked us about the elections. I think the elections, and we looked at it for the past 20 years for the preparation for this round here. Elections, at least in Germany, don't matter so much. What matters is the interest rate policy of the ECB. And I think with Ms. Lagarde as the head of the ECB, we're pretty safe for the next 10 years that there won't be a regime change in the interest rate policy. As long as it stays the way it is, plus minus, let's say, 100, 200 basis points, we won't see big shifts.
So you see one of the key challenges, potentially interest rates would be the thing that would change the picture for you in terms of the investment appetite, or?
Well, yes, because then there would be a reallocation between bonds and real estate, and a few $100 billion would go back to bonds, and which is right now demand for commercial real estate.
Okay, good. And just picking up on some of the cities, obviously for you, Leonard, then you're looking at very different to Christian there. You're looking specifically at Munich and at Berlin. Were there concerns? I mean, there was obviously concerns and bad press in terms of the residential side and the local government in Berlin not being investor friendly. What's your take on that? And is that something that's specific to residential, or what's your view on it?
Yeah, I think we do act a bit differently in terms of investment locations. So Coros used to be a company that was investing all across Germany, from Berlin, Munich, Hamburg, Düsseldorf, Regensburg, many locations. And then at some point we realized that, we see the greatest potentials in the two cities, Berlin and Munich, and we'd rather go international and expand our operations to London now, where we also have an office now in Paris. I do think that the fundamentals, they're all right. I mean, interest rates obviously define where money flows, and that's all to be confirmed. But we are more on the product side, so we are a value-add core plus player that is investing heavily into building substance and trying to create great workplaces on the one hand, and ESG compliant product. And I think this kind of product is very much in demand in these big cities. We also do think that workplaces will change, and cities will have to think more thoroughly in the future about how to attract talent. And for us, the talent flow is always the most relevant factor when we decide on a city, because we think eventually talent will lead to business, will lead to innovation, and will lead to a great place. And therefore, I think the map in Germany will be more selective for many investors. I think there are some locations that will suffer a bit more, and then there are other locations where there will be even more interest in the future, more so. And especially when you deliver the right product, because as rightly said before, investors are very closely looking right now at assets that offer the right cash flow profile, but also the right credentials in terms of is that building a sustainable one. And I think as a value-add player, there might be a tough time in terms of initial yield, but there's a great time in terms of creating the right product now for future generations and prolonging the life cycle of existing buildings, because in the end, what we see in the cities, it's existing buildings, it's not newly built mainly, and therefore we need to care about upgrading existing buildings, creating great workplaces, and I think those kind of places will be very much sought by institutional investors.
Okay, good. And this is for anybody really, but is there, I mean, often investors are looking at Germany for kind of core product, but there's, Leonard, they're talking about value add plays in Munich and Berlin. Are there more, is there a diversity in terms of the types of investors who are looking, and are there opportunities for value add as well as core and everything in between? I mean, what's the current market like?
Well, maybe I can pick up on that. I think if as an investor you have a value add return profile, there is no other way than to have investments with a development component. Otherwise, I would say that's what you said: repurposing buildings, etc. Or
you need to invest heavily.
You need to invest heavily. Otherwise, there is no business plan that you can follow in getting your 10-15% IRR returns. And another way, though, there is one other way I would say that I see at the moment is large portfolios, and we are talking about 500, 600, 700 million euros value-add portfolios all over Germany, because some of the listed companies had some trouble during Corona and needed some liquidity, and there was a possibility to do good deals, but you had to be in the position to do very quick deals and very large deals at the same time.
Okay, good. And it would be interesting just to touch a moment on, I suppose, the financing side. Is financing broadly available for everything, including development, or post-pandemic, are the banks beginning to focus a little bit on the business that they've already got as opposed to reaching out for new business? What's the position in terms of financing? And anybody can pick that up.
I think, as always, it depends. For a good quality, fully let building, you will definitely get finance at acceptable rates. But for example, earlier this morning, I had a meeting with a developer who's going to buy a piece of land on a speculative basis in order to build an office building in a B city. And he told me that he has several banks who are interested in giving him finance, starting from an LTV at 50%, going up to a whole loan. Say there's an institution willing to give him 100% of the purchase price as a loan. So yes, there is finance, but it depends. The smaller the city, the more difficult it gets to find money. That's why, for example, we bought something in Fürth last year, which is next to Nuremberg in Bavaria. And we did not talk to the big private banks. We approached a local Volksbank, a savings bank, and we managed to get a loan for a development at 75% LTV, which is great.
Okay, good. Any other views on that? Feel free to.
Yeah, I mean, generally, I think banks are also looking closer to what they finance. But I think they did before, and I think in Germany the financing landscape is generally pretty good. I think there are other countries where you find it more problematic to find the right financing tranches.
Okay, good. And particularly looking at your business there, is there a better view on financing something that is where you're repurposing, where you're redeveloping something? Does that count as more of a green kind of, does that tick a lot of sustainability boxes and those kinds of things because there's a regeneration element to it, a repurposing element?
I would say banks are generally looking at, I mean, I'm not the financing guy, so probably that's another panel with our head of finance. But I think what I can confirm is banks are really closely looking at what's your plan with this building, and is it just another office building, or is it something that makes sense also in their eyes? And banks do have a clear view on like what could work out and what not. And obviously, if you deliver cash and they can finance a cash flow, that's obviously way easier still than doing developments. But on the other hand, we are not speculative developers, so we always we usually have building permits, etc. So we generally it feels quite okay.
Okay, good. I wanted to touch a little bit on the sectors as well. So maybe we've talked a little bit about office, but again, if anybody's got more of a view on office, feel free to share that. But also logistics and residential were obviously seen as big winners in terms of both investment volumes, but also focus during the past 18 months. So how do we see the residential markets at the moment? And I guess any views on the logistics one, it would appear from the logistics view that everything is great. But any views anybody's got on those would be interesting, I think, to share.
I think the residential sector, more than the other sectors, depends largely on the interest rate policy regime. I think what people understood is that Germany doesn't have vacant stock anymore, basically, in the residential sector, and interest rates are still slightly below 1% if you want to acquire your home, and that drives markets in Berlin, in Frankfurt, in Munich, and we see prices in the residential sector that we haven't seen ever before. As I said, as long as we don't see 5% interest rates, the prices will stay that high, in my point of view.
Okay, good.
I fully agree with you, and as you said, there's no vacancy in Germany, and every apartment is let like selling pretzels. But you talked about the condo market, but also when you look at developments for big multi-let schemes, investors are willing to not only wait until the building is finished, they are willing to buy even a site with only the promise from the developer that he will deliver a nice residential building. So I think it's a heavily competitive market. And it's, as always, I always say to my clients, we have the same problem. Find these products, because as there's no vacancy, there's also almost no properties to buy. And if there's something, then you have 100 of investors who want to pay the same price.
Okay, good. And in general, is availability of a product an issue across the markets, as well as residential, that's also in other sectors as well?
I generally do believe so. Well, I mean, we are having offices in the locations we invest in. We do allocate a lot of resources on finding the right product and not just waiting till something arrives and pre-packaged and everything looks perfect and then we can buy it. So we do see this shortage. We are in very intensive talks with pretty much all the owners of relevant buildings in the cities we're in. We always present business plans how to upgrade their buildings in order to meet new requirements. I mean, if you're in London, there are some deadlines you need to meet in order to meet your EPC requirements, meaning you need to invest in your existing stock, meaning that you might be more open to talk about sale or joint venture schemes. And I think we will see that a bit more in the future in Germany as well. And as always, we'll proactively look for product. But there was a shortage from the beginning of our investment activities in Germany. It always felt that there's not enough product for the demand we're seeing.
Okay, good. And looking at some of the, things like retail, hotels and leisure, those that were viewed as being worst affected in some ways. Are you seeing deals coming onto the market? Are you seeing people interested in those sectors? Any chance of a bounce back in retail, for example? Some views on that would be interesting, I think.
Actually, with regards to retail, yes, it bounced back strongly, even after the first lockdown. And earlier this year, during the third lockdown, we sold a shopping center in Frankfurt-Oder for a stabilized pre-corona price with 3 insolvent tenants. So that, and the second largest being Adler. At the time, they were declared insolvent, but the investor understood that it was a good location, that the shopping center footfall, etc., recovered or would recover soon, and was willing to pay a normal price. So I think what investors did is they looked very carefully, is this is this particular center going well or not? And what you saw before, like a few years before, is, I mean, like 7, 8 years before, big shopping centers were the flavor of the month. And everybody, every large fund, etc., was buying large shopping centers. They fell out of favor. But still, there are enough investors who look very carefully for the Fachmarktzentren, shopping centers, discount stores, etc. And with regards to hotels, we didn't see this avalanche of distressed hotel deals coming. Actually, the only deals we basically saw were hotel operators who still owned some properties, sold their properties, and kept on as an operator. And so very little distressed hotel deals. Yeah.
Okay. And do we get a sense that, I mean, because there's been a lot of talk around exactly that point, distressed businesses, non-performing loans. Do you see people positioning themselves for that, or do you just think that this is different to the financial crisis in a way, that it's been dealt with differently, and so these issues won't come through?
Yeah, well, we see some investors positioning for that scenario. Personally, I believe it's not coming. It's going to change when there will be a next sort of financial crisis. And I think the Corona crisis and the consequences are completely different to what we saw in 2008, 9, 10, 11, 12.
Okay, fine.
I must admit, we haven't seen too many distressed situations as well so far. So, I mean, we are, let's say, a value-add discretionary fund now raising a 400 million fund equity, and we are well prepared, but the only problem is there is no distressed product. So we need to invest heavily in existing stock that is still fairly priced, and try to meet this run for quality that we are seeing in the big cities, that tenants are willing to pay a fair rent for a really good product. So that's what we're doing right now. We're not seeing too many distressed situations. We're also closely looking at how to reconvert hotels, shopping centers, and we are all checking this, but still the pricings are not, I'm not a shopping center expert. What I can say is there are not too many cases that a conversion from a shopping center into something else works out financially.
Okay. And in terms of the capital, you mentioned the fundraising side there. Are you seeing sort of new international capital interested in Germany? Are you seeing different players from across the world?
There's a lot of interest in the German market. I think there's still, we still come from a time when there have been travel restrictions. So for new LPs coming into the market, it's probably a bit more difficult than it used to be to get to know to the locations, to the manager. I think that's now getting easier. And we still see that there is a lot of interest and also new capital coming into the German market. Yeah.
Okay, good. And Tobias, I suppose from your point of view, what are you seeing? I mean, so for example, when we've talked before about the different types of capital, there was a focus on Chinese capital or Korean capital or, Middle Eastern capital. As we kind of move away from the sort of travel bans, what are you expecting to see? Are you already seeing, people coming back, investors coming back?
Yes, so they at least start actively looking into Germany as a market. Now that they are allowed to travel again, they also do site visits. Since the products we currently market are they are more of institutional type as what I call boring money. This is nothing for international investors because they have a different yield expectation. But for example, we currently market a property which is not among the usual suspects in terms of property type, but we have a long-term lease contract with an investment-grade tenant in a C location, rather B, and at a multiplier somewhere around 15 times the rent, which in these days is a bargain, more or less. But And in this respect, we saw a lot of interest from money coming from Israel, because they also in the past they always focused on good quality tenants, long-term lease contracts, and they did not care that much for location, but for, as I said, the quality of the tenant and the length of the lease contract. So my take is that investors from abroad come back to Germany again, but I would say in the next couple of months more as visitors, not as buyers.
Okay, good. And Christian, from your point of view from RSM, are there any particular things that you're seeing, whether that's trends or anything that you're particularly focused on there, looking at the German market in the audit side, or any of those other aspects, anything that you're particularly focused on from an RSM perspective?
So, sorry. So, I would say some words to Tobias, and I agree, because I think that Germany is quite a good country, and we handled the Corona crisis quite well. And if you see, we still have some growth rates. Next year, we expect a growth of the economy nearly by 5%. So Germany is coming back, and so we are still a safe haven for the investors, and still interesting for doing business here in Germany. And from our RSM perspective, it's also the same. We get more and more demand from foreign investors, and who are interested in investing in Germany, doing business, starting new business activities. And so I expect that the demand is still increasing in the next months. And I also think that the good thing is that the election was 2 weeks ago, and so that for us it was quite clear that we do not have a very left coalition with a red-green coalition, which was make me really afraid if this was would be the new coalition. And so we have a stable system now, and so we have a good economy, good environment for investors coming to Germany.
Okay, good. And just in terms of some of the fundamentals, so do we expect to see rental growth coming through, whether that's for offices or in the sectors that you're working in? I mean, is that what we're expecting to see coming through? Which logically we would, I suppose, if there's an element of inflation coming through, we would expect there to be some rental increases as well. But what's the sense of that in Germany?
Well, I would say you really have to look at the various markets and truly understand supply and demand fundamentals. If you look at Berlin, there is no vacant space. If there turns up a new Zalando in Berlin, 10 years later, they take up 200,000 square meters. And of course, this will let the rents explode further. And as Berlin further becomes a sort of gateway city with, new venture capital and new inventors going to the city, like industrial companies like Tesla opening a plant just outside of Berlin, etc. I think the pressure will stay on the Berlin markets. But it really depends. I mean, you have the same sort of demographics and economic figures here in Munich on a different level. But it's also, everything is rented out, sold out. So this will keep the pressure on rents quite high. In other markets, you have to really, you have to look carefully. It's a mixed picture.
I also think it really depends if you see the rental increase or decrease. I think there can also be decrease for let's say outdated product in not so well connected places. I think we are all aware that the car commute, the daily commute to the office gets less and less important, and that e-bikes, and we had this discussion before about e-bikes. And just the new generation, new talent coming in, they are demanding different things, and probably the office right now in Munich, in Aschheim, is way less attractive than it used to be 5 years ago. So I think we do see a run for quality products, so companies really caring about which kind of products they're offering to talent, because we also see a talent shortage again. So the young generation is way more demanding than we used to have them. They want to have all the amenities. They want to have showers, bike racks. They want to have a green building. They care about sustainability. So if you deliver the right product in the right city, in the right location, you will see rental increase. If you pick the wrong location and just open the door and offer the tenant some outdated stock, you probably see decreasing rents.
Okay, good. There's around 5 minutes to go, so I don't know if anybody's got any questions. If you do, now is the time to ask them, because it'll be too late otherwise. So just raise your hand if you've got a question and we'll come to you. Yeah, sure. This should work, Marcia.
Christian, we've heard from the other three in the panel about the general situation of the German let's say real estate market, but then also targeted to different sectors. We talked about the election, which took place approximately 2 weeks ago. I wondered, are there any implications with a new government relating to tax issues? Like, for instance, we have in the Netherlands that there was a change of rate in VAT for transfer tax from 2 to 8%. Is something going on here also in Germany, also in view of ESG requirements coming up?
Okay, so currently we do not see any changes in the tax regulation and tax requirements. There was a change in the middle of this year regarding real estate transfer tax. So the hurdle rate was decreased down to 90% if you want to avoid to pay real estate transfer tax. And currently there are still discussing the new tax rates, and we see different parties. So some parties would like to increase the tax rates for specific groups, others would like to reduce. So we have to wait and to see what the new coalition will decide and if there will be any further changes.
Okay, great. Thank you for that. Thank you, Marcia, as well. So we're almost out of time, but last kind of question is going to be, investment. What do we do? Where do we focus on? Or we can pick up on big trends, depending. You may say that RSM is not allowed to talk about investment, so that's up to you. I'll leave that open. So let's start with that. So where do you see the biggest opportunities? So you can view that as your personal view or as an RSM view, Christian, whichever you like. But let's start with you. Where do you see the kind of biggest opportunities at the moment in Germany?
Okay, so if you ask my personal opinion, I think that the logistics sector is very interesting. I mean, we see the e-commerce trend, and we have much more demand than offerings in the sector. But I think if we look through us, we see that the population in Germany gets older and older. And so I would think that, for example, older care houses and so on are still very interesting in the future.
Okay, senior living, interesting, great. So let's come to you, Lennon.
I think everything that changes the city to a better and more attractive place. So if you look at the cities nowadays, you have 90% outdated office stock, and that's, we do workplace and office, so that's something I can talk about. So if you are able to upgrade this stock into a more sustainable and longer lasting quality for tenants, that's a great investment, and then I'm sure that you get the right rents and type of tenants for it. And I also think that cash flow will probably be less important in the future. It's more about having the right product and being able to lease it again and again and again, and not just buying a cash flow in a location that might never work out in the future again.
Okay, great. Christian.
Yeah, actually, I'm with Christian. The aging population is such a massive trend, which is in its infancy right now. I think the assisted living sector, etc., will explode over the next 10 to 15 years.
Okay, interesting. And we'll have a session as well on senior housing, healthcare, senior living, those sides tomorrow. So that will be an interesting one to pick up on. Tobias.
Well, since we have this situation that yields are almost non-existent anymore in more or less any sector, as I said, 2 years ago, 3 years ago, 4 years ago, I would still go and invest in business park type office and warehouse buildings in smaller cities, somewhere between 30 to 50,000 people, with a granular tenant base, because this is for me, it's similar to multi-let residential buildings. And when you find these buildings, you can buy them at nice yields, somewhere around 8 to 9% gross initial. They're not that often anymore because also these willing sellers, they heard of or read in the Handelsblatt of multipliers beyond 30 times the rent, so they think they can get it for their building as well. So it takes a little longer to convince these sellers that 30 times does not fit for a building in Limburg. But there are these properties, and that's where I put my money.
Okay, great. Thank you.